So the market closed decisively lower on Thursday ahead of the US jobs report. If the employment numbers come in stronger, then paradoxically this will be bad news for stocks because the Fed will be more inclined to hike interest rates by 50 basis points than 25 at their next meeting. Whereas if you get a softer report, then that will reduce the probability of a aggressive rate increase. But anyway, the market sold off Thursday and it got to where it should have. What do I mean by that? Well, if you look at this hammer candle that was printed several days ago off the 200-day moving average, people who bought on the back of that, some of those guys will have placed their stops below that level, right, at 39.20. So, key levels to watch then heading into the jobs report. 39.20, the previous swing low, is pivotal. If it reclaims that level, then there's a possibility we'll go back all the way to 39.70, the base of Thursday's breakdown. And that level will be the most important resistance moving forward. So for as long as the market remains below that level, I would say the path of least resistance would be to the downside. Obviously, there is a possibility it could go a little bit deeper into that region I've just shaded. But on a daily closing basis, the sellers will want the market to remain below 39.70 to keep this trend intact. On the downside, the next potential target could be liquidity resting below this low at 38.85. But essentially, the trend is broken. So it's anyone's guess how far this could fall. We just take it from one level to the next. Let's move into the intraday charts and see. We actually went short the S&P a couple of days ago when it had broken support at 4,000. In fact, let me talk about that and review my other trades, just so you can get an idea in terms of how I look for trade ideas. Because it's all well and good when you analyze the markets, but how do you actually turn those into trade ideas is a whole different game. So I hope you learn something when I discuss the trade setups that I share with my private group. Okay, so let's just talk about that. So on the back of the risk-off sentiment on Thursday, 3 of our trades hit their target. The first one being the EuroCAD and Nasdaq as well, and S&P 500. There are a few other trades I'll show as well, but let's start off with the S&P. So as you can see from the after picture, it got to the first objective, and this was based on this trade idea I had posted on Wednesday on the hourly chart, which was in turn based on the daily time frame chart. As I'll show you here, we had a 3-bar reversal candle, formation I should say, when the index failed to hold above that key 40-50 resistance level after earlier bouncing from the 200-day moving average. So it was literally a case of the buyers getting trapped into this rally and resistance holding where it should have. And so my target was based on the fact that a lot of people will have placed their stop losses below the 39.20 level, and that's where precisely the market went to on Thursday, taking us out of that trade at a profit. So let me just go back to the start of this page and talk about the Nasdaq. This is what happened. This was the trade idea. So this was actually on the hourly time frame. Okay, so the reason we went short is because of this. See, the market had been rallying nicely. What should have happened was when the market came back down, that area of prior support should have held. Didn't. We broke below it. So once we broke below it, the market then bounced back to retest it from underneath. So that area was previously support, and I thought it could be an ideal area to get short at, and that's what we did. And I placed the invalidation level above the high of this thrust candle that had led the sell-off. So going back to what happened, you can see that the market sold off as we had expected, hitting our first target. Whether or not it will get to the extended objective remains to be seen, but 250 points is not a bad trade at all on the Nasdaq 100. So that was the Nasdaq. Let's talk about the EuroCAD. This is what happened. So we went long from around this area on 8th of March, I think it was. Yeah. And at the time we went long, the market was falling, right? This was before the Bank of Canada rate decision. Let's go to the actual trade idea. This was it. Yeah. We posted it at 12 o'clock London time, 12, just after 12. It was literally a case of buying into support in a rising market. So whenever there's a strong trend, we like going long on the back of short-term weakness at support or near support. And our first target was here. Why did I choose that level? Well, first of all, a lot of people will have placed their stop loss orders there, people who are short this market, meaning that the market will eventually take those guys out. But I didn't want to take the risk, which is why the first objective was just below those triple highs. But the extended objective, as you can see, remains open above that area of liquidity, which I think will be taken out because of several reasons. But from a macro point of view, the Bank of Canada stopped hiking interest rates, haven't they? And meanwhile, you have the European Central Bank still trying to tame high levels of inflation in the Eurozone with rate hikes. Core CPI in the Eurozone recently had a new record high. So the ECB's job is not over. They are going to hike interest rates at least a few more times before they pause. So the policy divergence is going to shrink between Eurozone and Canada as the ECB catches up in terms of rate increases with the Bank of Canada. So that's why the euro is gaining ground against the Canadian dollar. But also this currency pair has been helped by the ongoing risk-off trade after the S&P 500 fell sharply into the close on Thursday. So that was another trade that worked in our favor. Let me just show you a few more. This was the pound. This is a trade idea we posted based on the fact that it was testing potential resistance from underneath at around 119.25. Whether or not it will get to a new low depends almost entirely on the jobs report from the US on Friday. The FTSE, we traded short the FTSE a few days ago when it broke this long-term bullish trend. The dollar yen hit our target at 137.80. That was the extended objective. The first was at 136.50. It hit both of those targets. We went long on this market on... When did we go long? It was 1st of March, right? We went long because, I made a video on this. It was based on the fact that we had created this big bullish engulfing candle a few days ago, and the rounded retest of that level from above should have held as it did, and that's why we went long. And the result of that trade was that it worked out nicely for us, and then in the end, let's just go back to that one. This was gold. Gold dropped to our main objective. Just as well that we chose that level because it bounced nicely from there, didn't it? And the reason we went short, it was, the reason was given here. But looking at the chart, this black line here at 1845 should have held a support after price broke above it at the a couple of days before this was issued. It didn't, right? It didn't. It went back below, suggesting that the people who bought gold, they were trapped. So that's why we went short, simple as that. And the target was 1810. I chose that level because 1808 is a key level of support, isn't it? I spoke about that in a video you can find on my YouTube channel, tradingcandles.com. You can find that video. I spoke in detail why 1808 was a strong level to watch, and we bounced from 1808 several days ago now. Anyway, that was my main objective. I have got an extended objective on this trade, which may or may not happen depending on the outcome of the jobs data from the US and the CPI the week after. This was dollar Swiss hasn't really worked out as well as I had expected. It's still open. We bought support here after a pullback, but it has kind of stalled. As you can see, it's gone up, but there hasn't been much of a follow through. I wonder whether that's because of the risk-off trade. The franc tends to find support when equity markets go down. So yeah, that one hasn't really worked out for us. That one. Aussie Kiwi was another one that worked out nicely for us. I talked about this in a video a few days ago. Specifically, it was about this inside bar candle, right? And how I trade the failure of that formation. Anyway, it fell because of the RBA providing a dovish 25 basis point hike in midweek, which caused the Aussie to weaken across the board. A few ideas here, guys. Dollar CAD, forgot to mention dollar CAD. This one worked really well. I've spoken a lot about the dollar CAD because of fundamental reasons. The Canadian Central Bank was going to stop hiking interest rates while the US Federal Reserve got more hawkish. So the dollar CAD was always going to find buying interest, and so it proved. So this trade, if you go to the initial idea, it was here on 6th of March when we posted this. The market had consolidated bullishly after breaking its bearish trend line. So anywhere around that area was an ideal entry area to get on board on a long trade. So the consolidation had allowed overbought conditions to work off through time rather than price action, right? And so it was gearing up for another move to the upside. Lo and behold, to the upside it went. And so what we did next is move the end validation or stop loss level higher to below the low of the thrust candle, thereby reducing the risk on the trade. And then eventually it went on to hit that target. This trade was a potential long trade on the S&P that didn't work out. We closed it at break-even-ish. So it was based on a retest of this level to take us to a new high. It was meant to be a scalp trade, as I described it here. I wanted to wait for some confirmation, which we didn't get in any case. But here I've provided an update on it. This long trade idea is no longer valid as momentum has been lost. Technically, at the time when I posted this, it was still in profit. So I advised the group that if they want to hold, it is at their own risk. But I had closed mine for a few pips profit. Anyway, a few hours later when Powell spoke, I don't need to tell you what happened. Markets dumped, and that trade would have hit the stop loss had it been open. But I had closed mine. Another trade that didn't work, or is still in progress, is this one, Euro Swiss. I have given it a wide invalidation point below the 200-day and recent low. So it may still work, but because of the risk-off trade that we've seen in recent days, it's kind of drifted further lower from the entry area. So that one may hit the stop if we don't see a quick recovery in the next few days. So not all ideas work, but ones that do, we make sure that we give ourselves lots of room to the upside, right? So that we make more on the winners than we lose on the losers. So with that, even if the strike rate is below 50%, you still hopefully will end up being profitable if you're making more on your profitable trades than losing from the losers. Anyway, that's a topic of discussion for another day. Thanks for watching. If you like this video and how I analyze the markets to look for trade ideas, then make sure to join my private group, details of which can be found on my website at tradingcandles.com.